Okay, welcome guys. I'm going to give you my thoughts on the stock market. We're going to use technical analysis to find trade ideas and opportunities in the market. So we're going to start off today with tech. We'll look at some of the broad market indices, some individual trade ideas I pointed out recently, and then we'll wrap up, guys. Drop me a thumbs up if you're new. If you've been with me for a while, join the private membership group. If you're interested, I do put a lot more comments and trade ideas in that membership. They don't all work out, guys. Nothing, works out, but they are trade ideas. And then if you don't know how to trade the trade ideas, take my stock market technical analysis course. I teach you guys how to, basically spot your own trade ideas. And then also it'll help you with any trade ideas that I put out. So link in the description below for the membership and for the technical analysis course. There's also a join button next to the subscribe button. If you've already subscribed, there should be a join button there. If you're an iPhone user, though, I guess Apple is restricting that join button. So you have to go to the description of this video to find the link to join the private membership if you're using an iPhone. All right, that's it. Okay. Give you my thoughts on triple Qs. Here's what I got going on. It's been a little choppy the last couple days because we've been at support. So my trading plan all along, and I'm looking at a daily chart here on triple Qs. All along, I talked about this being a bear trap right up in here, this price action. That is exactly what it was. So we got the gap down and pretty impulsive selling. Now I was looking for a reaction on this trend line right here. Okay, that's the trend that the market's been in since the low Junes, or since mid-June of this year. And we're just kind of chopping through it a little bit, but not really breaking down impulsively. So I'm going to tell you guys what I think about this. But this is where I would expect a reaction. You can see there's support. I would think we get a bounce here, or some sort of reaction. Yet we've been kind of treading water right at this area, and that's why it's been choppy, because it's been a battleground. The bears are trying to push it to break support, and the bulls are buying it, and it's a battleground. So it's a little tricky, when I give you guys the minute by minute play, calling the minute by minute plays to call that exactly right, day by day. But let me just give you my thoughts on where I think we're heading. So triple Qs, we've got support right down here at 296.33. Okay, that's a level. You can see support. That was resistance. There is, several reactions right there at that level. And then right here, it was support. So we got 1, 2, kind of 3, 4 reactions there, or at least 3 basically. So we could trade down to that level. All right. That's one possibility. And the reason why I could see that happening is when I flip over to like SPY, the S&P 500, the trend line that would match up with what that Qs one is basically right here. You can see here's your June lows where the market started this bear market rally. We had one reaction, and then we would have the potential for a third reaction right down in this area at about 392, 393, somewhere right in there. Also, you can see resistance, support, and that's sitting there at about 390. So that's a zone of support just underneath, about 1% down to, if we were going to go all the way down to, from where we're at, all the way down to that potential horizontal support line, that would be a drop of about 1 and 4/10%. Okay, so that's support down there. We should get a reaction there. We don't have to. We could just break through and continue to fall, but we should get a reaction. Okay, so if that happens in the SPY, then going back to the triple Qs, that maybe sets the triple Qs up for a brief little drop like this, and then a recovery, I would think, and a bounce. All right, and then probably bounce all the way up to this 314, 313 area. Okay, so that's potential. Now, we don't have to bounce. Nothing says that we have to get the bounce. I just think we're going to get it, and let me show you why. One, obviously we've got to break support, and today you can see we're not selling impulsively. We're not really breaking down. We're grinding around. We gapped it up, sold it down. They're just grinding it around, but they're not really breaking any technical support. Two, when I flip to the hourly chart, I can see that we have some bullish divergence. Now, we might make another new low, but you can easily see, look, this drop right here, we made a new lower low, but look at the RSI. All right, it's starting to hold up, and it actually has bullish divergence on the RSI. So these are divergent lows on the hourly chart on the RSI and triple Qs. Not so much on the PPO. We don't have it there on the PPO quite yet. But if we dip down and make a new lower low, and especially if we drop down to that 96 area, that will likely be a divergent low as well in both the RSI and the PPO. So that's something to take note of. Bullish divergence there on the RSI, not on the PPO. And then also when I go to the futures, well, actually, let me go to the SPY real quick. You'll see here on the SPY, same kind of setup. Now, not really confirmed yet, but RSI has divergence, just barely hanging on to it on the hourly chart, and then not on the PPO, okay? So that is, kind of mixed signals. And then if I go to the futures, here's the NASDAQ futures. Again, the NASDAQ futures, clear bullish divergence. Okay, you can see bullish divergence here on the RSI and on the PPO. So this low was a divergent low, and the low you can see as we're dipping down today, this is basically there. We're making another divergent low. So these are divergent lows on the hourly chart that sets us up for the potential to rally up to about 1280 or 12,820 or so, somewhere right in there. Okay, so that is why I think we're going to get a bounce. We've got divergence. We're set up for it, although we haven't seen it in the price action yet. Okay, going back, we can look at the SPY futures. You can see here also on the SPY futures, bullish divergence, all right, on the RSI and the PPO. And we have a bullish falling wedge pattern that we're making, and we just are, trading within the apex of that wedge. So I suspect if there's going to be a breakout or a rally, it's going to trigger in the overnight session most likely. Okay, so we'll watch for that. Okay, so going back to what I had said a couple days ago, I thought maybe what would happen is tech, and we're looking at the triple Qs again here on the daily chart. I thought maybe tech would kind of grind around for a few days while the rest of the indices were selling off and kind of reaching their support zones. Qs is down about 0.5% today, but really no change from the price action from yesterday. We go to the SPY, and it's down a little bit more. So we're seeing more selling in the SPY than we are the tech sector. So far that's holding up to be true. Tech is kind of grinding around while the SPY and these others are dropping down to their support zones. So again, I just continue to build the case for what I think is going to be a rally. Again, I'm not looking for anything major. If you're long term, if you want just to stick on the long term and not worry about these little bounces and drops and things, then at the end of the day, you just go back and look at the bigger picture. On the SPY, we have a downtrend. We have lower highs and we have lower lows, and we are downtrending. So again, whether we bounce here or not, I think the bounce would get sold into. So if we bounce into this resistance, I think we sell into it. We could bounce all the way back up to 428. That is a possibility. But whether it's there or there, I think we get sold into and ultimately start to head lower and take out these June lows. Okay, I'm anticipating we take out the June lows, whether it's right now or we bounce first. That's a little harder to say, but longer picture, I do think we're taking out the June lows. And at the triple Qs, again, I'm looking for a bounce here, but then I'm looking for that to get taken out and then ultimately work our way down to the June lows, take those out, and head down to our longer term target right now, 238, 240, somewhere right in there on triple Qs. That's your pre-COVID highs. I mark that out every time. And that's where I think you get your next sustainable leg higher. Not necessarily a bull market, but just another bear market rally that might last a little longer. And that's where I think it starts from, down there. Okay, that's all I have on that. Let's go ahead and look at some of these individual trades. LLY, I've been talking about that one for a while. More selling today. We're just dropping like a rock, guys. Now, this thing doesn't drop that impulsively because it's a healthcare stock, pharmaceutical or whatever. So it's not going to drop like crazy, but you can see at the end of the day, the trade setup's playing out exactly as expected. So bearish rising wedge, sell signal right there, back test of the trend line, and down she goes. Okay, that was all forecasted when you got the sell signal, which was forecasted by the big negative divergence on the daily chart, telling me that we were about to reverse trend for a pretty meaningful trend reversal. So at the end of the day, first price target or profit target right here at about 284, the 200-day moving average, and you can see that's good. That was resistance right in here. It was support right in here. It's about 284 down to about 280. Okay, it's a zone of support right in there. So that is where I think we're dropping to on our first for our first profit target. Again, you can see we're already halfway there. So we've got another 6% down to about 7-8%, somewhere right in there to go. And that's where I think we go. They're probably going to bounce right here just for a day or so. This is kind of a little bit of support right in here. So they'll probably get like a little 1 or 2 day bounce and then continue lower down to our targets. So I'm just holding short on that, and it's looking good. RYI, this is Ryerson Holding Corporation. This one, the reason why I like this as a short trade, if you go looking at the daily chart, you can see starting back in May of 2020, support. This is your uptrend line, support. We got a sell signal or a breakdown, okay? You got a good leg down on that first initial drop. Hit support, good support down there at about 18-19, okay? And then you get a rally. So, but all we did is rallied right into resistance right there. Traded there for a couple weeks up at that resistance, but wasn't able to break it. And up here, it put in negative divergence. So there's your negative divergence on both momentum indicators. Trading into resistance with negative divergence. That's about as good of a setup as it gets for a short opportunity. So the best opportunity to short was pretty much right into that. Or you could wait for the next sell signal. And I set that up as this trend line right here. And boom, there's your sell signal. Yesterday was your sell signal, big breakdown. And today, more selling. So we've got the 200-day to battle with. They're going to probably bounce it at least for a day or two. We're not quite there yet. It's about 28. So we'll probably get down to 28 and then get a little bounce. Ultimately, that should break. And I think we head lower. All right, we head down to this 18 and likely down to about 1241. I think is our pre-COVID highs right there, about 1241. Okay, that's our target right there. And if we're down there, it's very likely Triple Q's is down to its pre-COVID highs as well. But that's the trade idea. So I'm sticking short on this one for now. Gold miners, GDX. So again, I'm not super warm to the miners right now. I'm not shorting them because they don't look like a good short. They just don't look quite ready for a rally. But here's GDX. This is gold miners. You can see we have a bullish falling wedge. We have clean bullish divergence on the daily chart. Okay. And we had a breakout. That breakout was the buy signal, or the breakout was right there. No real follow through though. You gapped up, so that was pretty impulsive, but no real follow through. And then it's coming in for that back test. I talked about that a couple weeks back, how I thought maybe the miners might come in for a back test before rallying, and we're basically doing that now. So, getting close to what looks to be support and a buy signal. And I might step in right down here at about 23, 2350 or so, or we're getting close. This is kind of a buy zone. You could even, start stepping in on GDX. Now, not all the miners look like this. This is kind of a broad index of the miners. But this is, it is bullish for sure. I definitely wouldn't want to short. I'd be more interested in scaling in long here for a rally. So I don't know. I got to kind of look around and see what, I think. The thing that kind of turns me off is gold. Here's the metal, gold bullion. I don't have any divergence like I do on the GDX. You can see, you've got lower lows in momentum. And, this low that was right here was a lower low. So it wasn't a bullish divergence. If we run down and take out this and then recover and put in a bullish divergence like that, I'd be a lot more open to these miners and stuff. But as of right now, I just see the gold's just moving lower and momentum's moving lower as well. The price is moving down with momentum. So I need to see a change there, I think. Okay, the market just closed, so we'll just wrap up here. You can see here triple Q is just closing just below my trend line. Again, my trend line could be off slightly. You know, when I draw trend lines, you try to capture the most reaction points, and you could be off slightly. But the point I want to make is we are below it, but just briefly, and that's not a breakdown. Okay, if you're going to break a key level of support, it needs to be an impulsive breakdown, whether that's intraday or you gap down the next day. It needs to be impulsive, and that's not impulsive. So, you know, it's probably going to rally back up in the after hours, and maybe even overnight we gap up, you know. So we'll see how we end up tomorrow, but for now we're just continuing to kind of chop around. I definitely see the potential to rally. I'm not super heavy long, but I do have some positions long. And if things don't go that way and we don't bounce and we do continue to break down rather impulsively, you know, then we can just flip back short. You know, that's the nature of trading, is you have to be nimble. You have to be able to switch positions. If you're looking for a certain move and you don't get it, then you cut your losses and you move on, and I'm willing to do that as well. So nothing says that it has to rally here. It just shows me that the market has the potential. The probability tells me it's going to get a small rally. And again, at the end of the day, I'm looking for a bounce basically from where we're at of about 5%. Okay, a 5% bounce, and then we probably flip short again and look for the next leg lower. Okay, guys, that's all I have. I'm going to wrap up. Check out the course if you haven't done so. Join the private membership. Link in the description below for both of those, and I will catch you guys on the next one. Bye.